Welcome to this deep dive.
Mm.
We are going to be today cracking open William Green's Richer, Wiser, Happier, and we're really going to peek into the minds of some of the most successful investors.
Mhm.
Um, but here's the thing. We're not just after like stock tips, right? We're after those universal principles,
Mhm.
those aha moments that can really help us make smarter choices in all areas of life, not just investing.
You got it. This is about extracting the wisdom, those habits, those mindsets that have helped these people, these investors, achieve extraordinary things. Like, how do they think? How do they approach risk? How do they define success? And that's what we're going to uncover.
Right. So let's get into it. One of the themes that Green highlights is this idea of cloning success. And specifically, we see this through the lens of this guy, Monish Pabrai. And this guy was obsessed with Warren Buffett, like attended Berkshire Hathaway meetings for like over 20 years,
Hmm.
taking meticulous notes. But it's not just hero worship. Right?
No, he took it a step further. He replicated proven strategies and thought that that was more effective than trying to be like some savant or something like that. And in his words, he said, I'm going to try to clone Warren Buffett. He had this 30-year goal to turn $1 million into $1 billion.
Wow. That's commitment. How'd he go out doing this?
Well, one of the key takeaways is that he focused on the underlying principles behind Buffett's investments, not just the specific stock picks, but like why is he doing what he's doing? And for example, one of the things he recognized was Buffett's emphasis on identifying businesses with a moat and, this durable competitive advantage, protecting them from rivals.
So not just blindly copying, it's
Mm.
understanding the why. Got it.
Mm.
Another theme that comes up is this power of simplicity, right? You'd think that all these big-time investors have these crazy complicated systems, but guys like Will Danoff, they keep it really straightforward.
Yeah, Danoff, he's the guy who manages Fidelity's contra fund, and he boils his whole philosophy down to three words: stocks follow earnings. So essentially, he looks for businesses, the best of breed, that have strong and growing earnings power. And he believes that over time, the stock price will reflect the underlying performance of the company.
So find companies that are making money, and you're good.
Yeah.
But like, what about market sentiment? What about these unpredictable events that could happen?
Well, these factors definitely play a role, but his philosophy really emphasizes focusing on those fundamentals. He believes that if you identify high-quality companies that have solid earnings, you're positioning yourself for long-term success,
Mm,
even if there are those short-term fluctuations that we can't avoid.
makes sense. It's like building a house on a strong foundation. Right. Now, let's talk about Joel Greenblatt. He uses just two simple metrics to find these hidden gems. I've heard of this. I got to be honest, don't totally remember, maybe just a refresher, how those metrics actually work.
Yeah. So Greenblatt, he's all about finding good companies at bargain prices, like a true value investor. And one of the things he uses this thing called return on capital, which basically tells you how efficiently a company uses its money to generate profits. And essentially, the higher the return on capital, the better.
Okay. High profits, that makes sense, yeah.
Yeah.
What's the other one?
The other one is earnings yield, which tells you how much profit you're getting for every dollar invested in the company's stock, essentially like an inverse price to earnings ratio. So high earnings yield, it's suggesting that you're getting a good deal.
Okay, so he's looking for those companies that have high returns on capital, meaning they're efficient, profitable, and high earnings yields, meaning they're undervalued by the market.
Pretty cool. It seems simple, though. Does it actually work? Well, Greenblatt has a pretty impressive track record. He's written books about it, managed a hedge fund based on these principles. He generated pretty impressive returns. Of course, no strategy is going to be foolproof, but, it really highlights this idea that, like, focusing on a few key things and not overcomplicating it can be really effective.
Totally, totally. I'm seeing a pattern here.
Mm.
A lot of these investors, they focus on simplicity and clarity over complex models and all that. It's almost like they're saying, cut through the noise and focus on what matters.
Exactly, and that's a huge lesson in itself. Now, moving on to another important theme, risk and resilience. William Green dives into this through Howard Marks, who's known for his cautious and very insightful approach to investing.
Yeah, I've heard of Mark. He's all about being prepared for those market downturns, right?
Yeah,
But he also believes that, like, most people just get this whole risk thing wrong.
he does. Marks is a master at identifying vulnerability in the market. And he says everything important in investing is counterintuitive, and the obvious is usually wrong.
Yeah.
He thinks most people fail to actually recognize the true risks they're taking, especially, when markets are going up, when everybody's feeling good.
So he's saying, like, when everyone feels confident and just piling into the same investments, that's usually the sign that, like, things are going to get messy.
Yes. He thinks that recognizing risk is just as important as, seeking those rewards. And he really focuses on building what he calls unfragile portfolios and unfragile lives. So, structures and systems that can withstand the inevitable shocks and setbacks that come with investing and with life in general.
It's like hope for the best, but prepare for the worst.
Mm.
But he takes it to a whole new level. How does he actually do this? How do you build an unfragile portfolio?
Well, a few things. First, diversification, right? Not putting all your eggs in one basket. Spreading your investments across different things, asset classes, industries, geographies.
So not betting on just one company or one sector, yeah. What else?
Second is margin of safety. You're buying assets at a price that's significantly below their intrinsic value. So this gives you a cushion if your analysis is wrong or if the market takes a downturn.
So it's like buying things on sale, gives you a little bit of room for error. Smart. Okay, third principle.
Third, emotional discipline. So not getting caught up in all that market euphoria or panicking when things are going down. He says sticking to your plan and avoiding those emotional decisions, that's key to long-term success.
Stay cool, calm, and collected even when the markets are going haywire. Easier said than done, right?
It definitely takes practice and
Yeah.
it takes discipline, but he does provide some great tools and frameworks for actually cultivating that mindset.
I'm seeing a theme here. A
Ah,
lot of these investors, they emphasize long-term thinking. They emphasize discipline, a willingness to go against the crowd.
yeah. They all seem to have this understanding that to be successful at investing and maybe at life too, you need a different approach. It's less about chasing those quick wins. It's more about building something sustainable, something resilient.
That's a powerful insight. Now, speaking of long-term thinking,
Right.
we've got to talk about these two guys, Jean-Marie Eviard and Thomas Russo. They really seem to have mastered this idea of patience, right?
Yeah.
Letting those investments compound over time.
Absolutely. Incredibly successful value investors. They've consistently outperformed the market over decades. But, it's interesting how their approaches kind of differ, even though they're both committed to that long-term approach to investing. AVR, he's known for having this incredibly rigorous research process. He really dives deep into the companies he invests in, scrutinizes their financials, their management team, their competitive landscape.
Like a detective. He's putting all those pieces together to find those gems. But he's known for being like a big contrarian, right? Like during the dot-com bubble, he got a lot of heat for sticking to his value investing principles.
Oh, absolutely. He was criticized because he didn't jump on that tech bandwagon, but his commitment to value investing, it paid off in the end. When the bubble burst, his portfolio was much better than others, the ones that chased those high-flying tech stocks.
That takes some serious guts.
Nah.
Like sticking to what you believe in, even when everyone else is telling you you're wrong. Impressive. So how is Russo different?
Russo takes more of a qualitative approach, actually. He focuses on companies that have strong brands, durable, competitive advantages. He's also got this philosophy, capacity to suffer philosophy. And it basically means that he's willing to hold on to these investments for years, even decades if needed, to let them compound. He often compares himself to a farmer. He's planting the seeds, he's nurturing them until they bear fruit.
I love that. It really captures that essence of long-term investing, right?
Right.
It's not about chasing quick profits. It's about planting those seeds and letting them grow. But, I mean, it takes a ton of patience, right?
Yeah.
How do you resist the temptation to sell when you see everybody making a killing in the latest hot stock?
Well, it's not easy, but he really emphasizes emotional discipline. And focusing on that long game, he believes that if you just tune out all that noise and you focus on the underlying fundamentals of your investments, you can avoid making those impulsive decisions that usually lead to regret.
Trust your process. Stick to your principles. Don't get swayed by all the craziness.
Yeah.
That's a good lesson. And this idea of tuning out the noise, it reminds me of this other thing Green talks about, intentional disconnection. Investors like Nick Sleep and Karia, they deliberately chose to disconnect from all that Wall Street craziness.
It's fascinating. They realized that all that information, like the research reports, all those headlines, stock updates, it was hindering their ability to think clearly and to make the right decision.
They were just enough. Pretty radical considering they're professional investors. So what do they do instead?
They focused on really understanding those businesses they were investing in. They ditched the research. They stopped obsessing over those daily price movements. They spent their time reading annual reports, visiting the companies, talking to customers, just developing their own independent analyses.
It's forget all the hype. Let's go straight to the source. Bold move. Did it work?
It really did. They achieved phenomenal returns. They were able to identify companies like Costco and Amazon early on. They recognized the long-term potential that other people missed.
Wow, that's incredible. What were they looking for, though, in those companies? Like, what qualities made them stand out?
Well, they looked for those businesses that prioritized customer satisfaction, cost control, long-term growth,
Right.
companies with strong cultures. They were looking for visionary leaders, sustainable competitive advantages.
So it wasn't just about the numbers. It was about understanding the whole business,
Yeah.
the people running it. I like that. It's a more holistic approach.
It is. They were looking for companies that were like building these enduring franchises,
Uh,
creating value for everyone involved, not just shareholders.
This is making me think differently about my own approach to investing. It's less about chasing that latest hot stock,
Hmm.
more about finding those businesses that are built to last, right?
Right. And that's a powerful lesson. You can apply this beyond investing. It's
Yeah.
like identifying those companies, those products, those services that are genuinely creating value
Yeah,
and making a positive impact.
I like that. It's like aligning your investments with your values.
Yes, exactly. And speaking of making good choices, we've got to talk about this whole psychology of misjudgment. William Green really spends a lot of time on this, and particularly through the lens of Charlie Munger, Warren Buffett's longtime business partner.
Oh, Charlie Munger. Always up for some Munger wisdom. He's a
Yeah.
master of mental models. He's got those witty one-liners.
He's great. He provides this fascinating framework for understanding those biases that can cloud our judgment and lead to bad decisions, not just investing, all areas of life. He's got this famous list of 25 psychological tendencies that trip us up.
I've heard of this list. It's like a cheat sheet for understanding human nature and its quirks.
Yeah.
What are some of the big ones?
Well, excessive self-regard is a huge one. It's that tendency to overestimate our abilities, and we make decisions based on our ego, not logic. We all think we're above average, but that can lead to some pretty bad choices, especially with investing.
Pride comes before the fall. How do we counteract that?
Well, Munger suggests cultivating humility, recognize we're all going to make mistakes, and there's always more to learn, and, seeking out diverse perspectives, being open to being wrong.
That's a great point. Surround yourself with people who will tell you what you need to hear, not just what you want to hear. Other biases to watch out for.
Over-optimism. It's that human tendency to be a little too optimistic, to think that things will always work out in our favor. Of course it's good to be optimistic, but too much can lead to too much risk-taking, and we don't assess those potential downsides.
So it's like finding that balance
Right.
between optimism and realism, not being naive, but not being like a total pessimist.
Exactly. Then there's confirmation bias. That's our tendency to seek out information that already confirms our existing beliefs, even if those beliefs are wrong. We all want to be right, but this can lead us to ignore evidence, so we make bad decisions.
We're like filtering reality to fit our own worldview.
Yeah.
Dangerous. So how do we avoid that trap?
Munger says, actively seek out information that challenges your beliefs. Challenge yourself. Be open to changing your mind. Be intellectually honest with yourself.
Yeah, good point. This whole idea of understanding our own biases reminds me of Munger's, his famous quote, invert, always invert.
It's brilliant. Instead of trying to figure out how to be successful, he says, think about how to avoid failure. So if you can identify the common pitfalls, the mistakes that lead to bad outcomes, you can work backward and avoid them.
Flip the script. Look at it from a different direction. So smart. There's that Munger quote. It is remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent.
Yeah, it's a great reminder that avoiding those unforced errors can be just as impactful as making brilliant moves. And it speaks to this idea of discipline, which is another theme that pops up.
Yeah, so many of these investors emphasize discipline as like a key ingredient for success. And it's not just about financial discipline, it's mental, emotional discipline too, right?
Absolutely. It's about controlling your impulses, managing those emotions, and staying focused on your goals, even when you are facing temptation or adversity.
And one investor who really embodied that was Arnold Vandenberg. His story is so inspiring. He faced a ton of adversity in his early life, but he developed this incredible discipline that helped him achieve amazing success in investing and just in his life.
Yeah, he's a testament to the power of resilience and determination. He faced so many challenges, but he never gave up. He had this set of principles, he had this process, and he stuck to it, even when he was facing doubt or pressure.
He's like a rock,
Right.
Unwavering in his commitment to his values and his process.
Yeah.
So powerful. This idea of discipline It ties into what we saw with Eviar during the dot-com bubble, right?
Yeah.
He got so much criticism because he didn't chase those tech stocks, but his discipline allowed him to, stay the course. And he ended up outperforming so many people who got caught up in all the hype.
You got it. Discipline is key. Especially when the markets are going crazy and everyone's making all this easy money, that's when your principles and your process are really tested.
It's about, like, having the courage to stick to what you believe in, even when it's uncomfortable. It's tough, but valuable.
Totally. And it speaks to this broader theme that Green explores. True wealth goes way beyond just money, right?
Yeah, so many of these investors understand that while money is important, it's not everything. They prioritize purpose, relationships, making a difference in the world.
It's about aligning your actions with your values, living a life that's both successful and meaningful. And we see this in all these areas: philanthropy, lifelong learning, building strong relationships, doing the things that bring them joy and fulfillment.
They're saying, yeah, money's important, but it's just one piece of the puzzle.
Right. They're striving for something bigger, something more holistic.
I love that. So as we move into the next part of our deep dive, I want to dig into some of the more challenging parts of this pursuit of true wealth. Because, life isn't always easy. Even for the most successful investors, there are bumps in the road. And Green doesn't shy away from exploring those struggles, those setbacks.
It's a reminder that even these folks, they're human. They face the same doubts and fears that we do.
So let's talk about those darker, more vulnerable aspects of their journey. Because often, that's where we learn the most.
Let's do it. It's interesting, how even these super successful investors, they still struggle with those same things we all do.
Yeah, it's like they're human too, right?
Right.
Makes them a bit more relatable. So whose stories stood out to you in terms of, like, highlighting those struggles?
Well, the one that really got to me was Jeff Karp's story. This guy had it all, right? He had the successful hedge fund, Tourbillon Capital Partners, I think it was called, managing billions of dollars, earning crazy amounts of money. But he was battling depression.
Wow. Yeah, that's like a huge reminder that money doesn't buy happiness. What was it, though? Was it just the pressure of the job? Or was there something else going on?
Green suggests that it was that constant pressure, that whole hedge fund world, chasing those short-term gains. And eventually it took its toll. He said he felt like he was on this treadmill, constantly striving for the next win, but, like, never really satisfied.
So it wasn't even just the money. It was the lifestyle, that constant pressure to perform, be careful what you wish for kind of thing.
Exactly. And he realized, he was like, this is not sustainable. And you know what he did? He closed his fund. He gave all the money back to his investors. He just walked away from it all.
Wow. Talk about a power move. It takes a lot of courage to walk away from that kind of success. But it really shows how important it is to, prioritize your well-being, even if it means you got to sacrifice some potential financial gains.
It's a huge lesson in knowing your limits, right? And knowing when you got to step back. It reminds me of what Bill Miller, he's that legendary value investor, once said about the importance of, like, being able to take pain. He said that's a crucial skill for investors to have.
I see the connection there.
Yeah.
Walking away from something you built, that takes courage. Sticking to your principles when the market's against you, that's got to be painful too.
And speaking of pain, Miller himself went through a rough period during the financial crisis, didn't he? Oh, yeah. Big time. He got a lot of criticism when his Legg Mason Value Trust underperformed during that time. I mean, he lost billions of dollars for his clients, and his reputation took a major hit.
Ouch. That's got to be rough. To go from, like, being on top of the world to facing that kind of, public failure. How did he handle it?
Miller's story is, it's really about resilience. He owned up to his mistakes, he learned from them, and eventually, he rebuilt his career. It's a good reminder that everyone is going to face setbacks, right? But it's how you respond to them that really defines you.
What doesn't kill you makes you stronger.
Yeah.
Right. But it takes a certain kind of mindset to be able to bounce back from that sort of thing. Did Green talk about how Miller was able to cultivate that resilience?
Well, Green emphasizes the importance of having people around you that support you, people who believe in you and, encourage you during those tough times. Miller had, like, mentors, colleagues who stuck by him, even when things were really, really bad.
Makes sense. Having people you can trust, people who will challenge you but also support you, that's so valuable, especially when you're going through those dark times. It's like having a safety net.
Totally. And that brings us to another point Green makes: the importance of finding joy in what you do. A lot of these investors, despite all those challenges they face, they really seem to love their work. It's not just a job for them. It's more than that.
That's something that I've been thinking about during this whole deep dive. They seem to be driven by something bigger than just money. They have this real sense of purpose. They want to keep learning and growing.
They are. They're always looking for new knowledge, challenging assumptions, exploring new ideas. They're always searching for that deeper understanding.
And it's contagious. It makes me want to dig deeper into my own work. Find the things that really excite me, that push me to be better.
And that's what's so cool about it. When you
Yeah.
find that thing that aligns with your passions, it doesn't feel like work anymore, does it? It's something more fulfilling.
It's like finding your flow. You're totally absorbed in what you're doing.
Exactly. And that reminds me of what Arnold Vandenberg said. He said his hobby was giving out books. He loves learning. And he wants to share that with other people. He believes that books can change lives, and he really enjoys connecting people with those books, the ones that can, inspire them, challenge them.
I love that. It's not about the money. It's about that impact, right? Sharing something you love, making a difference.
Yeah, true wealth isn't just about your bank account. It's about how you use your resources, your time, your energy to create something meaningful, something that helps other people.
It's about those activities, those connections that bring you joy, that spark your curiosity, the things that make you feel alive.
You said it perfectly. It's about aligning your actions with your values, creating a life that's successful and fulfilling.
And speaking of aligning actions with values, it makes me think of Charlie Munger's take on Sumner Redstone, that media mogul. Green mentions Munger saying something like, Redstone may have ended up with all the money, but that's not how I measure success.
Munger is big on that. He's always said that true success is about way more than just, financial wealth. It's those relationships, ethical behavior, intellectual curiosity, lifelong learning. Those are the things he values.
It's a good reminder that we can choose how we define success. We get to decide what really matters to us. It's about creating a life that's full of those experiences, relationships,
Yeah.
knowledge, the things that make us feel alive.
Yeah, and leaving a positive legacy, making a contribution that goes beyond just, how much money you made. It's about using your talents, your resources to really make a difference, create something that lasts.
Leaving the world a little bit better than we found it.
Exactly. So, as we reflect on all this, what's resonated the most with you? What are you going to take away from this?
That's a great question. There's so much good stuff here. But for me, it's that idea that success has so many different facets. It's about finding that balance
Yeah.
between, financial security and those meaningful relationships, having work that has a purpose, that commitment to always keep learning.
Creating a life that's prosperous, but also fulfilling. It's about aligning your actions with your values and making a difference.
Yeah. And it's about enjoying the ride, right? Acknowledging there are going to be those ups and downs, but those experiences shape who we are.
Love that. So if you could clone one habit from these investors, what would it be?
Ooh, that's a tough one. They've got so many good ones. But if I had to pick one, it'd be that intentional disconnection. I think in this crazy world where we're always connected, always bombarded with information, we need to create that space for quiet time, to reflect.
Totally agree. That ability to step away from it all, to unplug, it's essential for having a clear mind and just, feeling at peace.
It's like hitting that reset button, allowing your mind to just process everything and reconnect with that inner voice.
Creating space for those creative ideas, for inspiration.
And it's not just about disconnecting from technology, right?
Yeah.
It's about disconnecting from your own thoughts, the worries, the anxieties, just allowing yourself to be present.
Be mindful, being in the moment.
And I think that's something we can all benefit from. It doesn't matter what you do or how much money you have. It's a universal thing, right? This is how you can live a more balanced, more fulfilling life.
Well said. Now, before we finish up, let's come back to this idea that even those successful investors, they've all had their challenges. And it's often in those moments where we really see who they are.
It's easy to focus on those highlights, the big wins, but it's in those moments of struggle that we see their true strength.
And Green doesn't hold back on those stories, He shares those moments of vulnerability. He talks about the times they faced their demons and came out stronger.
So let's hear those stories. Let's explore those challenges, because that's where we often find the most valuable lessons. Okay, so the not so glamorous side of success, those struggles, where do we even start?
Well, Green talks about David Einhorn, the guy who founded Greenlight Capital. He's got this amazing track record, but he also went through this really tough period where he underperformed, and it really tested him.
I bet. Especially for someone who's used to, doing so well. What happened?
Well, it seems like his value investing approach kind of went out of style. Growth stocks were surging, especially in tech. And he also got some heat for some big short positions that didn't work out like he planned.
So, bit of bad luck with the market and maybe a few bad calls, huh? I guess it just shows that even the best can make mistakes.
Oh, for sure. And it's how you bounce back from those mistakes that matters. Einhorn owned up to it. He admitted his mistakes, looked at his approach, and then he adjusted to the market.
It's that whole growth mindset thing, right? Learn, adjust, come back stronger. But you got to have some humility to do that, especially when you're used to being like the top dog.
Humility is huge. So many of these successful investors have that. They admit when they're wrong. They're always looking for ways to improve. They get that the market's always changing and you got to keep up.
So it's not just about smarts. You got to be flexible, willing to change your mind. And that's what we were talking about before, right? That emotional discipline. When things are going bad, it's so easy to just freak out and make a dumb decision because you're scared or frustrated.
Oh, yeah. That's when you really need that mental toughness, that ability to control your emotions and just stick to the plan. Remember your goals and not get thrown off by every little setback.
Keep your head when everyone else is losing theirs. And it's so inspiring to see how these investors have done that. Face those challenges, learn from them, and they came out even better.
Exactly. Resilience isn't about never getting knocked down. It's about getting back up. It's about taking those challenges and turning them into something positive.
So, big picture, what's the main message here? What do you want listeners to really remember?
That real success isn't just about money. It's about living a life that, feels right. It's about your values, what you're passionate about, your purpose, finding that joy in the process, and embracing those challenges, opportunities to learn and grow, and then trying to make a positive impact too.
Well said. It's about so much more than just money. It's about building a life that, it allows you to thrive, to contribute to something bigger than yourself, to really experience it all.
Exactly. It's about those experiences, those connections with people, learning, and those little moments that make you feel alive.
It's about leaving something behind that's more than just your stuff. It's the impact you had, the values you lived by, what you gave back to the world.
And anybody can do that, no matter who you are, how much money you have, or what your life looks like right now. These stories, these ideas, they can help you. We all have the potential to do amazing things.
So to everyone listening, take this with you. Think about what really matters to you. What does true wealth mean for you? And enjoy the ride. Keep learning, keep growing, and never stop trying to be the best version of yourself.
And that's a wrap.